Good afternoon, friends. I am Jaisukh Chhajer, representing L&T Infrastructure Finance Company Limited. We are one of the largest private financiers in the renewable space. We have funded around 3 gigawatt of solar projects and around 3 gigawatt of wind projects till date. So almost 6 gigawatt as against the total installations of 43 gigawatt cumulatively for solar and wind in India till FY17. So this is pretty sizable. Before moving on to some of the innovative solutions, I would like to discuss or highlight some of the risk parameters, how typically lender evaluates projects, what are the key risks, what needs to be mitigated, and then maybe quickly discuss the innovative financing solutions, which my colleagues, my panelists have already briefed some of them, and I'll try covering some of the newer points which I think will be useful to you. So on the risk side, the typical, you can simply bucket the risks in the five critical elements: the sponsor risk or the promoter risk. Typically, bankers have been very particular in India about the sponsor, about the promoter. They have been very cautious in selecting the project. At L&T Infra, we do evaluate the sponsor and the promoter support, the kind of parentage the project brings in, their capability to execute. However, the dynamics of the project are extremely important. So, a project with a stronger counterparty, with a lower execution risk, with a project which have a grid which is readily available, all this makes us to select projects rather than only promoter or sponsor comfort. Construction risk in solar or in wind, the construction risk, as we have earlier discussed, is pretty low because of the shorter gestation period. So a solar project would typically take around 8 to 10 months or at max 12 months for completion, while wind also would be in the similar range. However, there are issues with regard to ROW, which is right of way for transmission towers. Then you would have land acquisition issues. These are two critical issues which are there for the at the construction stage. On the technology side, developers, even lenders, as well as other stakeholders are pretty much concerned on the technology, specifically with regards to the quality of the modules. Also, when we are doing our resource assessment, our wind resource assessment, the BOP studies, your panel studies, these are extremely critical while evaluating all the risks. Market risk, most sectors, offer this market risk which is pretty wide open, as against renewable, where you have a fixed PPA. You have a tariff which is identified. You have a very acceptable P90 or a P95 confidence number, which gives you a pretty certainty on the cash flows of the project. So market risk, in our view, is very much covered, but still what we need to assess is the health of the discoms, the kind of receivable period which these discoms have. It is extremely important to evaluate the financials and how the lender would want to go ahead with some of the discoms which are in poor state. The another risk which is now emanating is grid risk, which is basically your physical infrastructure or the demand supply risk. So here basically we are finding some constraints in certain states. We need to be extremely careful about it. Moving on to the some other aspects with regards to PPA, we have seen a strong push from the central government. This is very clearly seen from various initiatives which they have taken. The very recent has been the bidding guidelines which they have introduced for competitively bid solar projects. So this is the first time we have seen, certain clauses which were not there in any of the state projects or in SECI projects now has come as a bidding guideline. This was very much there in the REVA project, which we think, will be a big boost for the industry because this will enhance the confidence of all investors. So some of the strengthening measures which have been done in the bidding guidelines are, you will have the state government guarantee, you have the grid unavailability clause which has been inserted, then you have back down payments in case if there is any back down, then the PPA allows for payment from the discoms. You have a payment security mechanism which is for 3 months, which has been built into the PPA. And finally, you have the termination payment, which was not there earlier for any of the solar projects, now has come up in solar projects. It was earlier only available in the road projects. So under termination payment, in case of termination, then you will get 100% of your debt due plus 150% of your adjusted equity. This is phenomenal. So all these changes, makes the sector pretty interesting, as well as builds confidence among various stakeholders. Some of the initiatives in terms of innovative financing, which we have already discussed. I will just try to add a few more points. L&T Infra has been a pioneer in giving a long-term financing solution. So 5 years back, nobody thought of whether you will have a 16 to 20-year kind of loan structures. Today in India, very much solar, you are having projects which are having a 18-year, 19-year loan tenors. So that's the kind of confidence which lenders have built in. When you have a life, when you have life of the modules which is guaranteed for 25 years, you have a module warranty which is available for 25 years, then why not go with a 18-year structure? So we have seen many bankers who are forthcoming to give a 15 to 18-year kind of structures. Then we are seeing increasing requirement for EPC financing. We are seeing that developers are getting financial closures from the banks, from various institutions, but EPC guys who execute the project are finding it difficult to get their financial closures. They get paid once the project is commissioned. So we are trying to build a product for EPC funding. This is specifically important for the solar rooftop segment, where the confidence on the smaller EPC guys have been low, and nobody wants to look into a non-recourse kind of a funding for these guys. So it is extremely important we evaluate EPC funding as a big opportunity in the country. The third important point is the bond market. So many projects today, solar and wind, are getting operational. So after 2 years, 3 years of operational history, these projects essentially need to migrate to a higher rating category, and once they move to a higher rating category, these can essentially be moved to the bond market, where there are other investors like mutual fund, insurance agencies, foreign investors who can put in money and thereby free up the capital of many of the banks. It is extremely important that rating agencies are educated, understand the risk dynamics, and see how the projects have performed for the last 3-4 years, as well as build in additional cushions so that we can get a higher rating, specifically AA and higher. That will open up a lot of avenues for the renewable sector. The other avenue which we are seeing is the InvIT. InvIT basically is pretty new. It's only 2 InvITs which we have seen in the country. One is for Sterlite, and second we have seen for one more company. I don't recollect the name. So here, yeah, IRB Infrastructure. These are the 2 InvITs which have come up. So essentially here, the assets are transferred to a trust, and once these assets move on to the trust, the bankers can get out, and there are new set of investors who put in money with an assured return of say 10 to 14% depending on the risk appetite of the project. So this is another product which we feel will help the sector, to free up capital. The other avenues which we have already discussed, IDF, Infrastructure Development Fund, this is an important platform wherein this is specifically focused for operational assets, where long-term financing solutions are provided by specific agencies. So government has given tax benefits for IDF. There are various other host of benefits which are applicable, and this also will help in innovative financing solutions for the renewable sector. Some other non-financing solutions, which we think, could be template-based financing. So you now understand what are the key risks, what are the key mitigants, how do you evaluate. So you need to have a laundry of list or a checklist, a 20-25 pointer kind of a system. When you are comfortable with all those points, then you essentially can give a quicker sanction and improve the turnaround time. Another point which we have, I think, already discussed, Project Ready, which is basically a plug-and-play model. So here, all the infrastructure is ready. You have the grid availability, you have the land availability, basically the solar parks. This essentially will reduce the under construction risk significantly. So we are talking to rating agencies. for evaluating certain projects where you have 100% land availability, where you have 100% grid availability, then there is only cost which remains open is your module procurement cost. So even if that is tied up, there is no major risk in terms of construction for any of the solar projects. So can we get any under construction project to a kind of a rating? That will be a significant boost to the sector, and investor confidence will significantly improve. So we are seeing good investors, utility level players like Enel, NG, China Light and Power, which have invested in India. There are specific green bonds or maybe green funds which are available who are exclusively investing in the renewable projects. Yes, there could be a need for a green bank, which my colleague have already discussed. Yeah, I think I have covered most of the points. I am open to questions if there are any. Thank you.